Hi, this is Joseph. Today is Wednesday. It's December 22nd. This is a really important video. I wanted to talk about the HL30. So many of you are learning and studying the HL30 and you're having really good results. But as I say in almost every one of those videos, even if it's just an update video on the HL30 and the profits it's produced, I always say that it's really important that you understand when the conditions are optimum to execute that HL30, and then when the conditions are not correct, where you would completely avoid using the HL30 altogether because it could potentially lead to a failed trade. So how do you figure that out? And there are a couple of different ways. I review all of the different ways that you can eliminate or omit the HL30 from the possibility inside of the membership area. In the 10x FX, you're going to see a full module of all of the times that you should not execute the trade, the HL30. But what we're looking at, I'm going to review what happened today and show you again. This X right here was what I put and posted last night in the 10x FX daily updates. So in the daily updates, I mentioned to everybody, all the coaching clients, do not take an HL30. Don't try and short this at the previous day's high. So let me detach this and I'll walk you through the setup. So many of you who are already sort of using the HL30 at this point, you know that we're trading off of the previous day's high or the previous day's low. Really simple, really easy to identify. And in this case, you can see where price closed was relatively at the highs from the previous day. And then we get a couple of reversal candles here that look likely or look like they would print an HL30. The problem is, in a situation like this, and I'll step back a moment here and I'll show you the other charts and what I was explaining last night to all 10x FX clients, is that the conditions were setting up for a bullish move to the upside and possibly a breakout today, further even higher. And I'll walk you through the steps. So again, I put this X here, again indicating do not short or do not trade an HL30 to the downside. Now, sometimes they could potentially work even if you get a bullish engulfing candle that would indicate that price is going to go higher. Sometimes it will retrace and it'll pull back and hit that 20 pip target, and you can do it and get in and out pretty quick. But this is the type of condition that would be a higher risk trade opportunity where price might move down a little bit, but not necessarily hit that 20 pip target and then turn around and go right back up the opposite direction, and you would lose on the trade. So you want to avoid those. So again, last night with the update, I mentioned do not short, do not sell an HL30 here. Now let's go to all of the reasons why I mentioned last night in the 10x FX update you don't want to do that. So let's go to the daily time frame. So the first step was the daily time frame pound dollar. So let me go ahead and open this up. This is a daily time frame again, and you can see yesterday's candle was a bullish engulfing candle. It completely engulfed the previous day and closed almost 50% of the day before that. So that was a pretty strong signal, not to mention that we were also counting the waves and using the volume levels to indicate that this was likely to confirm a bullish move for today, which is exactly what we ended up seeing. We see that slight pullback and then it just shot straight up. So that's step number one. This is what I mentioned last night in the update to all 10x FX clients. Don't short. We're looking for opportunities to trade this higher, which would mean that we were likely going to get a breakout trade. Now the breakout trade is one that I refer to as the continuation breakout trade. That is another module inside of the 10x FX course, and you learn how to use that breakout strategy. Let me show you what it did today. So here is the breakout strategy. Let me go to my breakout page, and we're going to start off with the pound dollar. So here's the pound dollar. This is the 1 hour time frame. Now, if you have not watched any of the videos on the continuation breakout trade, I'll briefly describe what we're doing. What I'm looking for is a very specific range of consolidation. And this was the first trading strategy that I developed back in late 2000 and early 2001. What I was doing was trading breakouts of consolidation, and I had joined a chat room, and every time price would poke through, let's say, a little level of resistance, the people in the chat room would scream buy or they would scream sell if it was taking out the lows. Problem was they didn't know what they were doing. They didn't have that much experience, and they didn't have a very structured way to trade consolidation and those breakouts. So I kept losing money. So I would trade the breakouts when price would go through and they would say buy, and then price would turn around and come back down inside of consolidation, and in some cases it would reverse and take out the lows and continue lower. So I would get stopped out miserably, like left and right, every single time. So when I quit this chat room and I went off on my own to figure it out, I started studying consolidation. And I found that if I used a very precise range of consolidation, meaning from the low to the high, if it was a specific range and not too small, that when I finally got a signal candle that broke out of that range, it was likely to produce a consistent trending move to the upside, where I could trade a trending move for at least 55 pips. And on the pound dollar, that's what we did here. So we had a continuation breakout trade. Now, if you want more details, go into the 10xFX membership site, look at the module that reads Continuation Breakout Strategy, and you'll learn how to do this. I'll give you all the details because there's 3 indicators here that I'm using for confirmation. It's simple once you understand the 3 indicators, because I don't use them in a really elaborate way. It just simply shows me that there has to be confirmation and no divergence. And what that means is on that candle that closes above resistance, the Bollinger Bands, number 1, have to be separating away from each other on that closed completed candle. That's the first step. And that shows me a sign of strength. Now, I learned that from John Bollinger himself. I attended his weekend seminar in Los Angeles years ago. And one of the things that he was talking about was confirmation, the breakouts, and then, of course, the tests. Sometimes the pullbacks and the tests are healthy in and of themselves because they confirm that you're likely to continue to see price trending in the direction of the breakout. Now, I'm also using the Cci Indicator. And you'll notice that on that closed completed candle right there, I'll put my crosshairs there, you can see that there's separation between the 2 Bollinger Bands. They're both separating away from each other. If they were pointing in the same direction, that would likely lead to a reversal. I'm going to show you an example of that in just a moment. This CCI is also printing a higher reading than most of the CCI reading throughout this range of consolidation. And then, of course, the MACD is my final step of confirmation. It just needs to be showing that it's going to continue to trend higher. And you can see I get my first positive MACD histogram bar right there when that closed completed candle develops. Now, I use a 3 pip entry. If you want to know more about what that means, please study the continuation breakout trade videos in the 10xFX course. But the 3 pip entry basically means that I'm going to get in 3 pips above the high of the closed completed candle outside of this range. Now, I mentioned that this consolidation range has to be a very specific range. And what you'll notice here is the high of that range is 1.3243 and the low down here is approximately 1.3172. So if it's 50 pips or less and then I see a closed completed candle, it's likely also to produce a failed trade and it would come back down. It's got to be greater than 50 pips from the low to that high of consolidation, which in fact I got here. So this worked out perfectly. And what I'm getting at is that this continuation breakout trade set up before the HL30 that we were looking at here. Let me go back to that and just let me click here. So before we were looking at this range last night, not only did we have a bullish engulfing daily candle, but we also had a continuation breakout trade to the upside based on that continuation breakout trade, that strategy. And every time I see the continuation breakout trade, and I'm monitoring both charts throughout this process so that I can take advantage of these breakouts, as I see this, I'm not going to trade against that breakout once I get a confirmed continuation breakout trade. Again, this is executed on a 1-hour time frame. I don't execute this strategy on any other time frame smaller than the 1-hour chart. I can execute it on a 4-hour, a daily, a weekly, works perfectly on the daily charts, but nothing less than a 30-minute chart. I explain exactly why I don't trade, nothing less than a 1-hour chart. I explain exactly why in the 10xFX trading course, the module for the continuation breakout trade. You'll learn all of the details if you want to learn this strategy. But again, when I see a continuation breakout trade, this trade pays me 55 pips. And I don't have to use 2 open orders like I do with the HL30 to maximize the trade. I simply trade it. I put my entry, I know where my stop is, and then I trade it straight to that 55 pip take profit level. Now, I've always said that if you're hands-on, meaning that you're not at work or you're not sleeping, and it approaches your final 55 pip target, you can get an alert or a notification, or if you're at your desk, and you can watch it to make sure you do not see signs of a reversal. And if the trend's going to continue higher, you can trail this a little bit further. And at that point, I would start trailing it to psychological levels. So if my exit here was at 1.3308, my next target would probably be the 20 or the 50, and that is right up here. So I would trade it a little bit higher, and then of course the 80. I talk about the psychological levels that I normally trade to inside of the trading course. So this worked out perfectly. This paid 55 pips. Now, in addition to this breakout trade here on the pound dollar, I also got a breakout trade here on the pound yen. This is the pound yen, and this paid 150 pips. So it was earlier this morning that both the pound dollar and the pound yen hit their first 100. In this example, the pound yen, it hit its 150 pip target. With the pound dollar, it hit its 55 pip target. And of course, as I mentioned, you can trail it a little bit further if you're hands on. Let me go back to the pound yen. So the pound yen, again, it was the basically the same setup. I had that low and that high, that price swing. And here is my continuation breakout trade signal candle right there. And then I'm going to open this up so you can see exactly what I'm doing. So there's the signal candle. And again, you can see that the Bollinger Bands are separating away from each other on that closed completed candle. The CCI is confirming. I have my MACD as well giving me my first MACD histogram bar positive. And then I simply trade it. So the targets on the pound yen, when I get a continuation breakout trade, the first target is 150 pips. The second target is 250 pips from the entry. So I would trade it for another 100 pips beyond the first target. But the reason that I closed out the trade here at the first 150 pips is that we're running into last week's high as resistance. And I knew it was probably going to top out right around this range. So I couldn't expect to trade it to that final 250 pip take profit level. I was only able to trade it to the first 150 pips. So between this pound yen trade and this pound dollar trade, I earned 205 pips, 205 pips with this continuation breakout trade. Now this is very different than the HL30, but it's very important that you understand how to trade breakouts as well, because the HL30 isn't always going to set up. And sometimes, like I said here, with this breakout trade to the upside, well, all of my readings indicated that price was likely to go higher. So there was no reason to be executing an HL30 in the opposite direction. That is one of the other conditions that you would identify to avoid using that HL30. Even if you use the HL30 exclusively, you can still monitor the 1 hour chart and set up your charts for this continuation breakout trade. And when you see one, don't trade against it. Now, the other issue with a continuation breakout trade is that you don't always get a continuation breakout trade every week. There have been some weeks that we get continuation breakout trades, perhaps 3 of them on the same pair in 1 week when price is trending. And then other times, like this week, I only got 1 continuation breakout trade, and today's Wednesday. So I'm not really too sure if I'm going to get another continuation breakout trade later this week, but it's not likely. We're approaching Christmas. So just to give you a heads up, again, going back over here with the pound yen, it's possible that it could break out above last week's high and then print another continuation breakout trade. It is possible, but it's not likely. And I'm not really expecting too much out of it right now because of the holiday season. So hopefully that helps you with another advantage or another viewpoint when you're considering trading the HL30. I'm back to my HL30 page. This is my pound dollar page. You don't want to trade against breakouts that are where every single signal is confirming that it's likely to trade higher. So that's why we did not execute an HL30 to the downside here on the pound dollar. So there was an HL30 that set up, but it was invalid because of the continuation breakout trades to the upside. Now let me show you an HL30 that did work out today. This is the dollar Swiss. This is a 30-minute time frame. And we were able to trade it off of the previous day's high, but also noticing that there was an overall resistance level here from the previous week right here. So this was the area of solidified resistance. You can see that it hit 1, 2, 3, approximately 4, 5, almost 6 times in the last few trading days, and it was a solidified level of resistance. Now, it is obvious that some pairs will move in and travel, continue to travel, while others are breaking out for different reasons. So the dollar Swiss paid 60 pips. It was really easy. There was my entry. I knew where my stop was. My stop was above resistance here at 92.60, so it never really came into question. It did test it, but it didn't come into question. It didn't go near it. And then I just wait for it to roll over. I'm counting the waves on my other charts just to make sure, for an additional sense of security and confirmation, that I am trading it in the right direction. And it slowly moves down, hits the first target, then hits the second target, and I'm out of the trade. So the HL30 did work on the dollar Swiss. This paid 60 pips today. Now, I did mention that I was going to show you a continuation breakout trade that did not work out. So let me go back to the breakout strategy. and I'll show you the dollar yen. Now the dollar yen here, it printed a completed closed candle above this resistance point. This is a 1 hour chart. Let me show you the resistance. This is last week's resistance. So you would think that that's pretty significant. So this candle, let me open it up again, closed above resistance, but the indicators don't confirm. You can see that on that closed completed candle right there, the Bollinger Bands are not separating away from each other. They're sort of coming together. The top band is pointing down, the bottom band is pointing up. So they're kind of pinching this range, which means I do not see a sign of strength according to John Bollinger and how he uses the Bollinger Bands. This means that it's likely to roll over and come right back down further. So we were able to short this for about 10 to 15 pips to the downside because it was a reversal. It was not a confirmed continuation breakout trade. I'll have to wait for that at some other point in the future where I can get a good clean consolidation range, box in the low and the high, and then wait for one closed completed candle outside of that range. So if you want to learn more about the continuation breakout trade, again, go into the 10x FX course. You'll see a complete module, and then come back into the group with the Slack channel. Ask me as many questions as you want, and I can make lots of videos on this topic. I have many videos. I've been using this strategy, the continuation breakout strategy, for the last 22 years. This is the continuation breakout trade here on the pound yen, and it works. I mean, it works in every situation. During the global financial crisis, 2008, I used this continuation breakout trade over and over and over on the yen and the yen crosses, and it worked out beautifully. And in some cases, I had 3 continuation breakout trades on the pound yen in 1 week, and they all hit their 250 pip take profit level. It was amazing. It was amazing as the market was sort of unwinding at that carry trade all throughout that global financial meltdown. But I have many videos in the membership course, and you can learn all about that strategy. Thanks for watching.